I'm switching to the English now, yes? Michael Saylor, welcome to Innsbruck.
Yeah, thanks for having me.
The great thing about talking yesterday is that we do come prepared, so we have three main topics today, but I do have one question that we all want to know, is do you ever get tired of talking about Bitcoin?
No, I'm running on Bitcoin.
How many hours do you do that every day? There's so much material of you out there.
You know, I think every day you get up and there's something new that's going on in the Bitcoin ecosystem to think about. And it never stops until you go to sleep. And then on the weekends, it's still happening. And some people think that's a negative, right? Some people like the idea that the stock market stops trading at 4 p.m. on Friday and it doesn't start trading until 9:30 a.m. on Monday. But I think that's a weakness of the 20th century. And I think the differentiating factor of Bitcoin for the 21st century is it never sleeps anywhere in the world. And that means there's always something to consider. And that makes it the most interesting asset in the world. And that's a competitive advantage. In the world we live in, there are hundreds of thousands of things competing for your attention. And the winner is going to be the most interesting thing.
I mean, that is pretty true. That is pretty true. Also, weekends are for saving the fiat system, you know, crisis situations. Since we've talked last year here in Innsbruck, there have been many things happening. One of the most important thing is BlackRock. BlackRock now wants to do an ETF. There is dozens of other ETFs applications out there. Just please give us your picture of where Bitcoin is standing today as an asset. What has changed in the last year or so? Is there reasons to be optimistic? Is there reasons to be fearful of an actor like BlackRock?
I think that from the years 2020 to 2024, that was the great transition of Bitcoin from being a retail asset in the crypto ecosystem, offshore, unregulated, poorly understood, the Wild West. And by the end of 2024, it will have emerged as an institutional asset in the mainstream financial ecosystems on Wall Street. Bitcoin's coming to Wall Street. And this is, it's like, I guess like college, you know, you started as a child and then you left home, and freshman year is very scary. And you've got 4 years of adjustment, and you encounter people that are better educated than you or smarter than you, that come from parts of the world you've never been to, maybe that have more power than you. And initially it's a bit scary, but by the end of your college education, you're ready to go out in the world and compete with everybody else. And I think that coming out of 2024, Bitcoin is emerging as an institutional grade asset, and it's not going to be competing with the Bitcoin forks or other proof of work coins, or, you know, Sam Bankman-Fried's favorite yo-yo token, but it's, or, you know, apes or cats or, you know, crazy crypto things. It won't be thought of as that. It's going to be competing against owning a block of real estate in London, or owning New York, or owning a ton of gold, or owning a building, or perhaps owning $1 billion of the S&P index, or owning 1 million shares of Apple stock. And so definitely nobody thought that in 2019 or 2020. But if Bitcoin's going to grow up, right, Bitcoin's on a path to go from nothing to 500 billion to 10 trillion to 100 trillion dollars to 200 trillion. At some point, it should be 10, 20, 30% of all of the wealth in the world. If it's going to grow up like that, then it's inevitable that it had to be embraced and was going to be embraced by Wall Street. So if we consider the significance of BlackRock and the ETF, well, first of all, the real important point is there's broad-based consensus now that Bitcoin is an asset class. And that's a major revolution. If Fidelity and BlackRock and if 10 other ETF issuers all agree that Bitcoin is an asset class, right, it should be 10x to 100x bigger than it is right now. There's also broad-based agreement that sometime in the next year, a spot ETF will be approved. And that's also significant. I think the third significance is this is not BlackRock taking over Bitcoin. This is Bitcoin, being embraced by BlackRock, right? This is Bitcoin being embraced by Wall Street. Now, nobody on Wall Street, none of these ETFs, none of these leaders of these money managers have said, we just heard about Bitcoin, we're here to fix it. What they've said is, we heard about Bitcoin, it seems like everybody in the world wants it. And since we offer people gold and bonds and equity and other forms of investment options, we have a vacuum and we are lacking and we won't be complete until we're offering a Bitcoin product. So I'm not concerned about it. I think it's to be expected. I also think it's everybody that joins the Bitcoin ecosystem with humility helps, right? When Block shows up with Cash App and they build Bitcoin into Cash App, with respect to the protocol, they're helping Bitcoin. They're providing an on-ramp to Bitcoin. Not the only one. When you create a new signing device, you're helping Bitcoin. When you create a new node or any kind of software that helps you run a Bitcoin node, you're helping Bitcoin. When you're buying Bitcoin, you're helping Bitcoin. How you buy Bitcoin, right, is of less importance than the fact that you respect the protocol and you're assisting it. So there's a whole class of investors that cannot currently buy Bitcoin and they can't support Bitcoin. Right? You could say, well, one way to support Bitcoin is I buy the Bitcoin, I hold my own keys. That's true. That's probably the purest way to support Bitcoin. But MicroStrategy supports Bitcoin by buying Bitcoin. And there are a lot of investors in MicroStrategy that can't buy the underlying asset, but they can buy the MicroStrategy stock. That's another way to do it. We're levered long, so you have to study our financials because you have to get comfortable with the way we do it. And there's 1,000 pages to read. So a lot of people might not want to read the 1,000 pages and figure out whether or not MicroStrategy's Bitcoin strategy is good or bad. So a spot ETF allows them to buy $100 million of Bitcoin in 1 minute without putting up any cash, without rebuilding all their systems. So anybody that's got $10 billion of capital, they have a compliance system, an accounting system, a compensation system, a control system, a risk management system. They have a bank. The bank actually, they have a collateral system. So all of these systems allow an employee working for the company for 2 years to punch a button and buy $10 million of something like Apple stock or government bonds or S&P index. And so that's what you would expect if you're running the pension fund of a fireman's union. You expect those controls, and if you're going to create a scalable system, you need all of those systems, if not to make sure that no one steals all your money, to make sure that you actually pay your taxes and you compensate people, and then you can do your accounting and you can do your reporting. So they can't buy Bitcoin right now. And the only way to buy Bitcoin the hardcore maxi way is they have to rebuild every single one of those systems. It took 30 years to build those systems. They're not rebuilding a parallel system that took 30 years to buy one new thing. So if Bitcoin wants the support of Wall Street, then it needs to be built into the BlackRock money management systems and the Fidelity money management systems. And this ETF is critical for that because the existing ETFs, the futures-based ETFs, are bleeding 10% of the capital a year. If you put $1 billion into a futures-based ETF, you will probably pay $100 million a year in lost capital because of the inefficiency of the futures market. So right now, people don't have, that is, institutional investors don't have any easy way to support Bitcoin or buy it in an economically responsible fashion. And so they just stay out. When you see these spot ETFs get put in place, you're going to be creating the equivalent of a 6-lane superhighway between Wall Street and Bitcoin. And now you're going to see billions and billions of dollars flow. In some cases, billions a week. In some cases, could be billions a day. And until you see it, you won't see any capital flow from those institutions. It's trapped in the 20th century asset classes.
We've seen a lot of activity from Gary Gensler and the SEC regarding differentiating Bitcoin from crypto. Do you expect this to continue? Do you expect more clarity even before the ETFs are probably approved? And also, are you starting to see a narrative change from Wall Street? Because if somebody like Larry Fink is going to embrace Bitcoin, suddenly there is no reputational problem there. By embracing it. There's more reputational problem by not embracing it, but Bitcoin still has this image, right, that in the media, and it's not gone away within like a day or two, but can you see the first signs?
I think the most important thing that's happened in the past 24 months is that Bitcoin has emerged as a legitimate institutional grade asset and as a legitimate ethical commodity. And if you roll the clock back to 2019, there are a lot of people that weren't sure, is it a commodity, is it a security, is it legitimate, is it going away, is it not going away? To be established as a legitimate institutional asset, it must be a commodity. Because if it's a security, it's an unregistered security. So an unregistered security is not an institutional grade asset. No legitimate investor on Wall Street, no one who is a custodian or a trustee of someone else's money can buy an unregistered security. It just can't happen. So what you have is a question, is Bitcoin a commodity or not? That has been resolved over the past 24 months via the endorsement of two heads of the SEC, Jay Clayton and Gary Gensler, the head of the CFTC, Boston Benham. It has been underscored by speeches by the head of the EU Central Bank, the head of the US Central Bank, the head of the Treasury, Janet Yellen. It's been implied, if not stated, in statements by the White House. It has been endorsed by leading Republican candidates like Ron DeSantis and leading Democratic candidates like Robert Kennedy. It has been endorsed and underscored by senators like Cynthia Lummis and Ted Cruz, and by Congress people like Tom Emmer, right, like Patrick McHenry. And it has been acknowledged by a nonstop parade of money managers. Last week, Mohammed El-Arian pointed out that it's not going away. It has been acknowledged by Larry Fink on CNBC, on Fox. It has been acknowledged by any number of journalists on CNBC, on Fox, on Bloomberg. If you roll the clock back to, I guess, Tesla Day or Elon Musk Day, when Elon announced that he bought Bitcoin, the day before, everybody in the crypto community and the Bitcoin community lamented the fact that mainstream media never wrote about us. Right? It wasn't that long ago, 2020, there was no mainstream coverage. And then all of a sudden, there was an avalanche of coverage. So the fact that Bitcoin is on the front page of the Wall Street Journal, the New York Times, Bloomberg, it's on television, right? And it is acknowledged as an asset class not going away. That's probably the greatest achievement of the past 24 months. When FASB announced the support for fair value accounting, They wouldn't have done that unanimously if there was any question as to whether Bitcoin was a commodity or an unregistered security, right? If Bitcoin's an unregistered security, then it's little better than a pump and dump scheme of a penny stock or a boiler room, antic from the Wolf of Wall Street. And, the accounting profession is not going to take up the cause of some random penny stock that someone wants to pump and dump. So what you have is a sequence of activities by politicians, by regulators, by the mainstream media, by accountants, by the legal profession. I left out judges, lawyers, but more importantly, judges who have actually acknowledged Bitcoin as a commodity, an asset without an issuer. And so if that's the case, right, I've said many times before, I've said, if it's not going to zero, it's going to a million. The reason it would go to zero is it's illegitimate or getting banned. And so the question is it illegitimate? Well, obviously not. It's an asset without an issuer. It's the world's first digital commodity and the greatest digital commodity. It's the only globally acknowledged digital commodity in the world. There's controversy about everything else. Bitcoin is the one non-controversial thing. So it is a legitimate asset. And is it being banned? Obviously not. The Chinese haven't banned it. It's deemed property in China. The Russians haven't banned it. It's property in Russia. The Americans haven't banned it. It's property in America. All of the controversy in our marketplace right now is surrounding crypto exchanges, the trading of unregistered securities, other tokens, and stable coins. And then the usage of these crypto tokens as a high-speed dollar substitute, a currency substitute. There's lots of controversy there. There will continue to be controversy. It is unclear how all that sorts itself out, except for the fact that there are two great conclusions you can come to over the past 24 months. Wall Street, the regulators, and the mainstream investment community endorses Bitcoin and appreciates Bitcoin. And everybody's skeptical of the rest of the crypto ecosystem, right? Bitcoin, yes. Crypto, not so sure, right? So that's where we are right now. I have met with lots of executives from these companies that are bringing spot ETFs to market. I can tell you for a fact, nobody wants to fix Bitcoin. Nobody wants to change Bitcoin. They've approached it with humility. They've approached it with grace. Their view is Bitcoin is a digital asset. People in the world seem to want it. We should do our part to provide services to make it easy to acquire and hold Bitcoin. Now, in time, right, the first and easiest step and the most critical step is that spot ETF, because that'll open up the super highway for, it's like a power line for hundreds of billions of dollars of capital to flow into the ecosystem. But eventually, Google and Apple will embrace Bitcoin. And when Google or Apple embraces Bitcoin and Apple puts some sort of Bitcoin signing device into the iPhone, there will be some people that will be skeptical and they will say, oh, we could never trust Apple. And that's reasonable. And other people will say, oh, well, it's an option for the masses that don't know how to, operate their own hardware wallet. And there'll be a debate. And then there'll be an avalanche, and then Apple, the Amazon will do something, and then Microsoft will build it into their browser, and then people will hate that. And then some other company will come up with a better Bitcoin-only one, and we'll like that. And maybe they'll succeed, and they'll grow. It'll be 10 or 100x, and maybe they won't. And then maybe at some point we'll wake up, and there'll be $4 billion, which will be of 4 billion people, and they will self-custody some amount of their own Bitcoin. And then they will have other Bitcoin that will be in an ETF in their retirement plan because their employer required that they actually have their retirement plan with a securities custodian. And the world will be heterogeneous. And we should embrace everybody that supports Bitcoin, however they support Bitcoin. You won't agree with them. Maybe you won't like that nation, and you won't like that company, and you won't like that money manager. And you will always have the option to do your own thing, and that's what makes Bitcoin beautiful. But we shouldn't actually discourage people that want to bring their resources to bear. And if you have $10 trillion worth of client money, and currently they can't invest in Bitcoin, and you rewire your systems to allow them to buy Bitcoin, then you're a friend of Bitcoin. You're not an enemy of Bitcoin. And until someone says, oh, by the way, we also want to change the protocol, right? They're our friend. When they decide they want to change the protocol or fix Bitcoin, then you have to take a different position. But I can say from personal knowledge, nobody on Wall Street wants to fix Bitcoin. They just want to be they want to join the party. They want to be helpful.